Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Monday, February the 13th, 2017. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we come together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, then we drill down to our trade levels, our targets, and our hypotheses for the day. We create four main hypotheses in order to have a plan in place for whatever the market shows us that it wants to do. We do not know what the market's going to do. We can only have a plan in place in order to execute without having to think on the fly as we see what the market is giving us. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. This is a group of retail traders operating within a self-organized learning environment. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Excuse me. Taking a look at the news today, there isn't really a lot of scheduled news. Excuse me. There isn't really a lot of scheduled news for the day. Really nothing coming out of Canada or U.S. So, basically, it's going to be all headline news. Excuse me for 1 second. All right, sorry about that. All right, so taking a look at the macro to micro, I always like to start my day with a simple candlestick chart, work it from monthly down to intraday. I use a 9 EMSA, a 20 SMA. And what I'm looking for is I'm looking for slope and separation, where what the strength of the trend is on what different time frames and where it's being challenged and violated. Of course, monthly, beautiful multi-year upward trend, challenged at the end of 15, beginning of 16. Then we get into this continuation pattern. This was a beautiful setup right here that we talked about in the room. You can go back to, back in, what was it, November, where we were talking about this continuation pattern, the rising three, and we get this beautiful continuation. We just put in new all-time highs in the Globex about 30 minutes ago at 2318.75. We again have unequalized highs between the Globex and the RTH. I'm pretty sure that's going to be resolved right on the open. But the continuation, the trend is very strong on the monthly. On the weekly, same thing, great slope, great separation, trading at all-time highs. Who knows how high it's going to go. On the daily, same thing, beautiful upward trend. On the 4 hour, same thing. On the 1 hour, we came down, we challenged the 20 and bounced off of it, getting continuation. Going to the 30-minute, we have a potential cup setting up, a cup and handle. Let's just take a quick look at that. Here's the left rim, right rim. See if it's validated with the retracement. Has not validated yet. It would have to come down below 2316.75 to put in the handle, but something to watch out for. Now, this is not a measured move until it's valid, but if it does become valid, we can take a look at the extension. And the primary target on the extension is 23.22, and the 100% will be 23.24. So just keep an eye and see if we do get the retracement back into the 16s. We don't want to go below 1475 thereabouts. So basically coming back to test the zipper right here and set up for a possible cup and handle. But the trend itself is still upwards to consolidation on the 30-minute. Going to the 15-minute, same thing. Nice slope, nice separation. Upward trend is intact. and then the 5-minute, we've come down and challenged 20, but we're popping. So we get a bit of a consolidation going here. So, pretty much everything is pointing to continuation up. We just, you never know when the market's going to turn. It's always difficult to trade new all-time highs. You got nothing to guide you. So you have to go to your smaller time frames and focus on, your probabilities within the intraday rather than the daily or larger time frame. You can see that we were in this consolidation for a very long time. Then we broke out, accepted value up here around the 2289 area, gap down, came down, picked up the late buyers down near where the price acceptance was in the balance zone, and then of course we gapped up again, accepted value again at 89, and then they got the gap up and the continuation. So we've got two gaps that we're going to have, where it looks like we could create a third gap. This could be the continuation gap. This would probably not be an exhaustion gap yet. It's a little bit early, and considering that the gaps, anytime you get gap situation and you're looking for that exhaustion gap, it's hard to do in the when you're putting in new all-time highs. I mean, just let's face it. This market can go up a lot longer than than we have in shorting power. So just don't get your short hat on yet. I'm looking for a blow-off top before I do anything, and I want confirmation to the downside. So I'll be looking for patterns and information that shows me that the buyers have been exhausted. And at this point in time, there's nothing indicating that. A couple areas to keep an eye on: the 2306. Of course, we're looking for that gap fill below here. But the key line in the sand now is going to be the 2298.50. That gets us back below the 2300, and a break below that is likely to return us back down into the microcomposite VPOC, down in around that 2289. So key line in the sand now is that 2298.25. And of course, here we are coming up 3 ticks away from putting in new all-time highs. So taking a look at what happened on Friday. Friday was basically just we fought the open or the range high from Thursday. We chopped around, and then finally we went up and put in the new RTH all-time high and the all-time high, thus equalizing all those all-time highs we had prior. And then we rotated back up. We created a double distribution. A key area that we're going to want to watch is this 2311. So that is definitely going to be a trade area. This is a nice setup because of the fact that we've got double distribution days, which is great because we know that above or below you've got high probability to return to the high volume node of each distribution. So our targets, of course, to the upside is the VPOC, and then to the downside is going to be that 2309 based on how we react to the LVN. The other good thing is we've got the midpoint and the VWAP from the RTH session there as well, so you got some good confluence there. Value area, you've got the 1475. I'd be watching for that for them to come back and possibly test it from above. And then you get the value area low down here at the 2309.75. So if you take the break below the 11.25, you want to be watching and scaling before the value area low, even though we're targeting where the VPOC was for a large portion of the day, and is the HVN. This is a little bit of a blunt area on the lower distribution. And then, of course, below you have the 2306.75. Taking a look at the overnight session, we have a Globex high, which happens to be our all-time high that was just put in, and we've got the overnight, so the overnight high is the all-time high, and our overnight low is down at 13.25. Just a couple ticks above the naked VPOC. Kind of a blunt distribution. The inventory is net long to neutral, and I would say it's more net long than anything. So if we get below the open of the session at 14.25, we're going to have some longs that are going to be caught. They're going to be caught in the hole, so they could get squeezed, and we could get a bigger move down. The VPOC overnight is 22 or 23.15. Got to get used to saying that 23, and that's just above, one tick above the value area high. Other than that, I mean, you've got a little bit of an LVN right here at 16, which is basically the high, but it's too blunt for me to use as a level. You could use the 23.15 based on the RTH range high, but I would really be watching the value area high rather than the range high in this circumstance. If we open up here, we're going to be opening up outside of range, outside of value. We're going to be looking for a possible gap and go, a impulse drive, or a open test drive on the open. So if you see that, you do not want to fade this. Okay, we've still have a measured move all the way up here at the this is the fib extension between the December 31st and January 26th and January 31st, and it's up here at 23.30.75. Our daily ATR has been tightening up. It's running right now at 15. So off of the low overnight, our low overnight being 23.15 plus 15, that takes us up to 23.30, which is just 3 ticks below the measured move we've got there. So we have range capabilities to get to that measured move. And of course, off of the high overnight of 23.1875, our downside daily ATR target is all the way down at 23.0375. And that takes us down to this naked close and naked VPOC and the gap fill. Don't want that. Okay, so that takes care of pretty much all our levels for the day. So, the trend is up. So, we've got to go with our main hypothesis is continuation. So my main hypothesis is a open auction out of range, a move down to test the value area high, possibly down to the naked VPOC, finding initiative buyers down here, rotating us back up, and I'm not expecting a lot of range today, so I'm looking for a lot of chop up here around the all-time highs. I expect that we'll see a new equalized all-time high, considering we're trading near 1875, but I'm expecting chop in this area, basically between the 23.30 and 23.13 area, and just getting a rotational day sideways as we accept price up here. We're putting in new all-time highs. They're likely going to have a rotational day today as they try to find value, and as we auction this area off. So Hypo 1, open auction out of range, a move down finding initiative buyers down in around the 14 to the 12 area, and then rotating us back up and basically just chopping in the area up here and putting in a basically a rotational day above the prior day range, or even just keep fighting this 1575 and chopping around here. Hypo 2 is a open auction out of range, a push immediately higher, find responsive sellers in the low to mid 20s, and then rotating us back down and coming down to fill the gap, and then chopping around down here and having a rotational day between the 11s or the 9s and the 18s, and then just chopping back and forth here. So both the Hypo 1 and Hypo 2 both have a rotation, in this area. Just one has a higher bias and the other one has a lower bias. Hypo 3 is an open drive, a push up into the, put in new all-time highs, chop around up here in the mid to lower 20s, and then push through and come up and close somewhere up here in the 2330s to 2340s, and closing up here and getting a gap and go continuation. Okay, third gaps are usually continuation gaps. And then the Hypo 4 is an open auction out of range, take out the overnight high, fail to get any extension, find responsive sellers, rotate us back down into the upper distribution, chop around in the upper distribution, and then fail below the 11 and come down and chop around down in the lower distribution with the possible late day probe down into the 2303.75 and filling that that one gap. So those are my 4 main hypotheses. Taking a look at gold. Gold is basically gone untested. Didn't quite get to the 48. We did get the mid of the significant breakout candle. That was our target to the upside in around this 48 to 44 area. They found responsive sellers up there. They brought us back down. They're now chopping around, in balance the last few days. And now we're coming down and we're testing the value area high, which is now our value area low, and our HVN in around that 26. It was 25.90. It's just shifted up to 26. Key level to keep an eye on is the 23. Below that, looking for the 28s. And then if we don't bounce between the 28s and the 2190, 2180, 2190, and 23. If we don't bounce off of here, then I'm looking for a rotation back down into the composite VPOC, which goes all the way back to 2008 and down into that 1215.90. Man, I got my numbers all mixed up. Anyway, I'm expecting a rotational day in gold as we chop around, and I'm expecting to possibly test down into the 23s. The trend is down right now on the gold. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.